Hi, this is Phillip Guan, CPA. Welcome to the classes of the J-Tech software. So this is regarding about J-Tech software for 2025. So you're going to use it in earlier 2026. The software companies already released the trial version of it, which means it's not fully functional yet, but it's good to train the state still under development. Some of the 5 turn things, but it's good to like this. So this is class number 6. All of my previous classes have been uploaded in the YouTube channel under, you can search Phillip Guan CPA or access pgctext@gmail.com. Okay. So I have more than 1 year's the things. And for this year, I purposely use the same picture so that you can easy to identify. Okay, it's like a little bit green colors. Okay, so that way you will be able to easier. If sometimes you miss the classes, you can go there to learn it. And it is the very best way to learn is, besides listen to me, you also can download the JTech software free version of it. They probably give you a 2024 free version. So you won't able to send the tax return to the IRS, but you can practice, okay? And then use one computer, download it, and the other computer using the YouTube to watch me. So you can forward, you can play back. So you can play, and at the very beginning, you follow exactly what I do, see if you can get it. And later on, you do something, and then you kind of like, you do faster than I do, and then you watch me to see, you confirm whether or not you're good. So that is what is good, okay? And after you done this, you also in the same time you study tax prepare class. It's the 60 hours classes, online study, open book exam, no government exam. That give you a knowledge as a basic, the entry level of tax professional. A lot of people work in H&R Block, they have tax prepare certificate. And the second level is called enroll agent, EA. It's the IRS certificate. You have to take free part. Now here's the good news. No college degree required. That means even if you don't have a college degree, you can still take the EA exam and pass it, become a proud EA, and become the second level professional. And the third part is the CPA, that where you have to have a BS degree, and most of the state require 120 units, and then you get the whole United States unified exam, and you also follow a CPA who have at least 1 or 2 years experience, depends on different state. And then you get certified. The highest level of tax professional is the CPA with the master degree in taxation. The master degree in taxation normally takes 2 years full time to study and finish. And I was crazy. And I finished that master program in 9 months with Golden Gate University. So it helps. So step by step, you could get, if you would like to get a franchise from PCC, you require 3 things. Number 1, at least a EA or CPA, not N, license. Tax preparer license, tax preparer certificate get you in the door, but not good enough for you to become a franchisee. An EA or CPA will give you that edge, knowledge edge. Second, you have to be part-time or full-time working in our PCC office and get promoted, become a manager. In our office, there are 4 levels. First level is associate. Second level is senior. The third level is assistant manager. The last level is manager. We promote people. The fastest is 3 months. We believe each and every level of the skill and knowledge could be earned at every 3 months, not 3 years. Average traditional CPA firm promote people on average about 2 to 3 years. And when they hire 300 people, they promote 100. Next level from 100, they promote 30. And then the next level from 30 to promote to 10. And then next level from 10 to 3. And the other one level is from 3 to 1. In a matter of about 10 to 12 years, 300 people in, 1 people left. I don't like that model. I would like to open-end it. I would like, if you put an effort, you maybe stay in one level longer than 3 months, but I don't think it takes you 9 months to stay in one level. So you may get promoted in 6 months or 4 months. So I believe that second, you can be working somewhere full-time and working for us so part-time and become manager. The third, which is the last, all of our job, including my own job, I review you guys' job, and sometimes even I'm too rushed to do something, somebody will review my jobs. Okay? All of your job will be reviewed by someone who have more knowledge and experience than you, and that person is your mentor. We assign a mentor for you. He or she can review your job and also mentor you. At the end of the mentorship period, the 3-month period, he or she is going to sign the Great Learner Certificate. Or somebody's going to say, no, you have to work harder to earn this. The Great Learner Certificate does not mean you have to be perfect, but you have to demonstrate it. You put your best effort to achieve the acceptable performance to represent our firm. So that's it. Simple, clear. With that, let me show you what we need to train today. What we need to train today, it takes about 20 to 30 minutes to train. Let me show you the end result first, and then I train you back how to achieve this. The end result is the family of 4 people, husband, wife. The husband works full-time. The wife is a housewife with 2 kids at home. And then they have a house as a primary residence. They're paying mortgage and property tax. And that is what they are going to do is the whole thing. Now, on the screen, far left corner, there's a data entry. There's where mouse is. You hit right there to start with the entry. You see many tabs across on the top: general, income, adjustment, credit, 2 of them, tax, health care, other form, foreign, miscellaneous, and state. Now, there are some blue, there's some black. Why is that? Blue means some input have been done in the previous year. The black means this whole section, nothing need to be inputted in the previous years. So as you can see, there's only 1, 2, 3, 4, 5 tabs. Of course, each tab, there's some sub-tabs inside. Now, in the tax and accounting professional, there's a word is called SALLY. SALLY. I happen to have a class student, it's called Sally. Blenda's mom is called Sally. I don't know. I'm not sure whether or not Sally is here or not. Sally, are you there? Sally was here yesterday. So now, Sally, in the accounting firm, tax firm, when you ask a question for a CPA or something more experienced, and somebody tells you, hey, Peter, you're going to do Sally. What that mean? Sally is the first letter of the foreign sentence, similar as last year. Similar as last year. When you do tax return, when you prepare tax return, 80 to 90% chance will be similar as last year. This family of 4, their husband and wife married, and each of them have so, their first name, last name, their birthday, their occupation, right? No. Homemaker is a nice way to say housewife. Now, the basic information, the left side is the taxpayer. In most of the taxpayers, they put husband in as a taxpayer and a wife as a spouse, but they, in their own choices, the wife could be a taxpayer and the husband could be a spouse. It's their choices. We respect their choices. And normally, when a client to come to our office, they will with the last year tax return if they are first year of a client. And we see how they trick it. And be careful. The things in their last year tax return may have mistake. I say may, not necessarily true, but I do see some mistake in that. So therefore, you need to confirm the information is nice way. So please take a close look in your previous tax return line in front of us. Is it any single letter and any single number in page 1 of the 1040 is correct and it still apply for this year? That will give you to confirm what they bring to you, the 1040, this page, this whole page. But the only difference is this is not 2025, it's 2024, the previous tax return. Now, and they're going to confirm, they say, yeah, everything is the same. Or they say, oh, shoot, they misspell my first name, or they misspell my address, so far, so on. Or say, you know what, we move, and this address no longer apply as a mailing address. It's the mailing address where the IRS can mail you at that moment. It's not where you live. It is the mailing address. So you may have been live in outside of this address in the year 2025, and you just move to this address. That's where your current mailing address. Do you see mailing address? So that's important. Now, what if this couple live in Texas for all this time until at the end of the year they move, and then in the new 2026 they come to you that this need to be doing like the Texas. They are resident of state of Texas. They are not state of California for income tax purpose for 2025. But their mailing address is state of California. So you need to be identified, make sure when you interview it. But the lucky thing, we have a form, everything. It's impossible you will miss it. You go through step by step, everything's there. But when you first working in our firm, more likely you're not interviewing. The information has been interviewed by someone and you are processing until you become more skillful and more experienced, and then we're going to put you in front of the clients. So therefore, in this coming tax season, if you are very first year to working with us, you don't need to worry about to do those interview process. And somebody more likely is going to do it for you. And you will have a corrected information with the last year tax return, with the current year information, and with the note and everything is there, documented. Of course, there's a phone number. You can still outreach to the client and their emails. Now, and then here's the health. Here, if they have health insurance, yes. Health insurance used to have a penalty if they don't have it, but no longer in federal. State of California still does. But you still want to answer that, yes. Now, if they are cover California, you need to input it, and the cover California will figure out there will be a refund or need to pay additional based on the income. That is not in here. That is under, like here, help, under here. Need to fill all this out. For this specific family, they are not cover California. They actually, the husband get a job, and the job covers the whole family medical insurance, and then the husband from the job withhold something and pay for the medical. That's a simple W-2 income. Okay. So now we go to dependent. Dependent is simple. Now, as you can see, the last name was not typed in, but it's up to you. I actually normally like to put it in. Okay. Now, when you sometimes you're going to face some of the kid last name is not the same as the husband's last name. What that means, they implement that they may in their second marriage. The kid is come from the first marriage. All you need to do is confirm, show it up in tax return, and could you confirm the first and the last name of the kid, the spelling is correct. Don't even say if this is correct. Just say the spelling is correct. The client is going to say, oh, the spelling is right. Okay, no question asked. You're not going to ask why the last name is not the same as the husband. That is going to make them feel very uncomfortable. Okay, so therefore, you have to respect client and especially their privacy. You just need to ask the right thing in the right moment. Always with care. When you say something to other people, you're always thinking about if other people ask me the same question, would I be happy? If the answer is yes, you do it. If they say, no, I will be mad, I say, don't do it. If somebody says similar thing to you, you're mad, you're not happy, why do you do something to that? Make them happy. We want them to be a happy client. So name, social, relationship, birthday, and check the apply checkbox and get this due diligence. Check the light box. Go back to dependent. Paste down 2 times. Paste down 2 times and go to the next one. Paste down 1 time, it doesn't go to the second one because there are 2 tabs. Now there's another kit, and you put all the thing apply. And then at this moment, you also need to do diligence. Don't forget there are 2 tabs. You check all the apply boxes. So now we close this one. We close one more time. As you can see, there's nothing 3, 4, so far, so on. Go to here, W2. W2 is easy, right? Belong to whom? Taxpayer. In these cases, that's the EIN number of the company. That's the company's name. And that person's address. And that's the W2. Income, expense, all the things, all different boxes. Just follow the same box, whatever box is it, put it in. Now, let me make it real. Now, this client also put in some money in the 401k under 12D like David. Let's say they put 10,000. Do we need to change 135? The answer is yes, because this 10,000 no longer taxable in the year 2025. It's deferred until he take it out. Let's say this 10,000 become 20,000. By the time to take it out, the full 20,000 include principal and interest, and again, are taxable. So it's tax deferred, not tax free. Where if your Roth 401k, the principal is already after tax, the gain is tax free. In reality, Roth is better deal. So now watch this. This. Now, as you put enter, you see all of a sudden 3 and 5 go to the same places. Now you have to override this number and then enter. Now, what that means is out of 125k, the 10k is go to 401k, and then this 125k subject to Social Security and Medicare tax. And that is what I mean. So if you see, when you go to upper screen, you see box 1, 3, and 5 are different. Box 1 is box 3. More likely it's actually box 5 because box 3 sometimes limited. So use box 5 minus box 12D equal to this. So now, as you can tell, it's less taxable. Box 1 is the taxable amount, both federal and California. So therefore, you can see in the 1040, you see it's changed, smaller. Smaller, that means pay less tax. They're more refund. Do you see it? They're more refund. Now, and then when you go to the primary resident, go to data entry. In general, far right corner, underline here, you see A, far right corner, item right deduction. I put the state tax as an estimate. After the software fully developed, you don't need to put in this number. The software will figure it all out and carry it in here. But you do need to check this little box. And then this is state tax. Now this is the property tax. Now this is talking about somebody have $2 million houses. But more likely, average individual in the Bay Area, something about, more likely in the most common thing is like this. Okay. Now, I want to show you this is because I want to show you more than 40K and how that works. Like this. So when they become more 46K, you get up to 40K. It used to be, this number was 10K. That means more number in here is good. You get 30,000 more deduction. That means you're going to get 10,000 more plus or minus refund. So a lot of clients is going to be at the file tax return will be dancing going home because they are getting about 8 to 10,000 or 12,000 more refund with the same. Okay. So, and then the mortgage interest. The mortgage interest, there are 3 places to input. If they're under 750, you just directly put in this number in there, for example. We can do that. Or you go to this 1098, that's where you're going to have the form. You fill everything in here. You also have to sort this number in here. I actually don't like this way because you don't see it when you review it. And just click in here. So I would rather you input in here if they're under 750K or if they're over 750K, you put this. Let's say if they have 1.2 million, they put 200K as a down payment, they borrow 1 million. Let's say 7%, that is 70,000. You check this little box. The laws only allow you 750K. What that really mean? That's not a good news, but that's the law. You cannot deduct the full 70,000. That's basically this. You can only deduct this. Why? Here's why. Here. This is what we just input, right? The law only allow you to get this. So you only get, so you literally get 75% of 70,000. This is this deductible. The fin and red, you are not tax deductible for federal. So that's why show up in Schedule A, the mortgage interest deductible is 52,500. And then the 17,500 is gone. Now here's the good news. For state of California, they do not follow the federal law for the mortgage interest, and they allow 1 million. So therefore, in the California itemized deduction, you have to add on 17,500. You get more deduction for California only. So that's good news for state of California. So now with that, so the Schedule A is huge, as you can tell. And then this kind, more likely when they get this, wow, they don't need to pay any income tax because their income tax was offset by the child tax credit. The income tax was 0. Is it? 24, like 24. So whatever they withhold it, just keep it there. And they also get a child tax credit. So you get 17,000, not 7,000. And normally they get similar situation about 7,000 plus or minus. Now this year they get 17,000. That's why I say a lot of clients are going to love to go to do 5 tax return this year. They're going to get a bigger refund and we are dancing going home. With that, any questions for today's classes? I'm done. If you have a question, ask me.
No question?
It's either you are so good, or I'm so good, or I'm so bad. So I hope it's either you're so good or I'm so good. Now, practice makes perfect. I'm going to upload this in the YouTube. You can watch it. You can download the tri-version software and in one computer and practice and the other one computer. So you will perfect. Okay, with that, I'm going to finish today's classes. I'm going to let the Zoom meeting to stop and convert. And I need to redo the class 4 in English. I have been taught already, but for some reason it doesn't work for the English version, so I have to redo it and upload it to the YouTube. If you want to, at 11 p.m., I'm not joking, to 11:45, you're more than welcome to come to learn another classes, class 4, which I'm going to use English to talk. I've been taught classes since 7 p.m. this evening. I start with English 7 to 7:45, and then Mandarin 8 to 8:45, and then Cantonese 9 to 9:45, and then English again 10 to 10:45. Why I do 2 English classes? Because some student from East Coast, like New York, Boston, or Canada, they're 3 hours ahead of us. So I do the 7 p.m., which is 10 p.m. of their time, so that they could go to bed early. Now, versus some of you in San Francisco Bay Area or West Coast, you're probably still in your dinner time. 7 o'clock is not good for you. That's why I have 2 classes. So I hope my effort is going to be helping you to learn this and enjoy it and are passionate about it. And maybe who knows, this may be something on your side or become your career. Okay, with that, I would like to say thank you very much. Have a great night.